Hello and welcome to interest.co.nz. I'm Gareth Vaughan with another of our double shot interviews. I'm joined by Brett King, who's the founder and CEO of Moven. Welcome, Brett. Moven's a New York-based startup, has just announced a partnership with Westpac in New Zealand. So, Brett, I guess that would be a good place to start. There's lots of things we can talk about, but we'll just kick off with your partnership with Westpac. Sure. Now, what are you hoping to achieve by partnering with a big bank here in little New Zealand?
It's a good place for us to start because New Zealand has some good characteristics for our product in that Moven was designed to be a disruptive approach to the bank account, but it needs smartphone adoption, it needs contactless penetration, it needs an awareness or readiness to use a smartphone in this sort of way. So New Zealand has those characteristics. For us, the objective is pretty simple. We're trying to get our app onto as many phones as possible. And unlike something like a Facebook app or some of these other apps you might use on a daily basis, our app requires us to link into a banking account. So we have to find local bank partners in each market that we want to grow into. So this is our first market outside of the US, and Westpac was the partner that we chose for that.
And we're talking really here about money management tools and budgeting tools. That's sort of primarily what you're offering at this point?
Yeah, I think we sort of stay away from budgeting as a concept because I think for most people, budgeting is just hard work. But for what we've tried to create in an app is an app that helps you understand your money, how you use your money, and whether or not you can afford to use it faster or you need to slow down, and how to help you save. When we looked at the mechanism of savings and budgeting that's been developed in the past, all fairly complex, setting up goals and having to sort of change your behaviour for this. The hardest thing is that most people, myself included, I'm not that disciplined to sort of be able to budget and do that. So we wanted to try and create something that was really simple. So the money meter tool, the spending meter tool that we use in the app basically gives you sort of a traffic light system. If you're using cash faster than you normally use it on an average basis, then you're in the red. So that tells you you've got to slow down if you want to save money. If you're in the green, then that's great because you're using less money than you normally do, and at the end of the month you'll have some money left over which you can save. So that's about as hard as our budgeting or money management tools get, but it's they're real-time feedback as well. So as you make every transaction, you're getting a receipt delivered to the phone in real time, which shows you this transaction, but how that affects that category of spending. So if you're eating out at a restaurant, you spent $70 at the restaurant, and you can see that you've spent $400 already this month on eating out. So every time you're making those transactions, you're getting a feel for where your money's going.
And you've talked a lot about how these tools you think are particularly attractive to the millennial generation, or Generation Y, as we tend to call them in New Zealand. What do you think is the particular attraction to that generation, and why is this important, I guess, for both Moven and a bank?
Sure. When we started out with thinking about Moven, we started with this basic plan of, in 2020, millennials who will represent most of the banking market, how are they going to think about banking? How are they going to use a bank? And, we sort of had this epiphany, which was, well, they're not probably going to walk into a bank. They're probably just going to download something to their phone. And so what does that look like? So then that got us thinking, well, it doesn't have to look like how banking looks today. It can be something different. So that was where we sort of thought, well, if you had a tool on your phone that you were using every day as a millennial, what would you want it to do? Well, it has to tell you how much money you have, has to tell you how you're using your money, and has to give you advice. Like, can you afford to buy that new iPad or new laptop or whatever it is? So that's how we started down this direction. So it was very much, Moven was always designed from the ground up for a digital native generation who have always had a smartphone, always had connection to the internet, and have different expectations of their day-to-day banking and money experience.
And you've talked about the app being the primary financial relationship, and mobile banking apps becoming a permissions platform. Can you just elaborate a little bit on what you mean by those points?
Sure. I think when you think about how we work with banks today, Generally speaking, if you want a mortgage for a home or you want to buy a car, then the bank has their own process attached to that, which is, fine, you've found the home you want to buy. Now you come through our process and we'll now see whether or not you qualify for this mortgage or qualify for this car loan. And that process has been designed around the fact that there's a distinctly separate process for the bank product than there is buying the home or buying the car. We don't believe that in the future it'll be like that. We believe that the bank will be integrated into the home buying experience or the car buying experience. And this is where the real-time element of this, the experiential element, changes. So if you want that sort of future as a bank, to have those permissions of having that sort of conversational dialogue with a customer, solving their financial problems in real time, you have to be on their phone and you have to have a relationship of trust with them. So that's where we see sort of the engagement model. You get the app on the phone, you show some trust, and then over time that gives you permission to engage them with messaging and real-time solutions to financial problems.
One of the bank executives I talked to in New Zealand a little while ago suggested, we're talking about the mobile app and how obviously they get a lot of customers using them now, a lot of times a day in many cases, but it's not a big revenue driver. I mean, obviously, you're talking about that sort of being a window into various sort of other types of lending, etc. One thing he raised was the possibility of having subscription fee services via apps. Is that something you think is likely?
I think there's a whole lot of different models potentially. Subscription stuff, there's one that I like is, for example, today you might think about an overdraft facility or a credit card. I think actually that those types of products will disappear in the future because they're more likely to become contextual. So let's take a scenario. Someone expects to get paid on the 15th of the month. That's when they get their salary in. But this week, the 15th of the month, or this month, it falls on a Saturday. So you're in a grocery store you have Woolworths here, right? You have a deal.
We have a version of it, yeah.
Okay, well, something like that. Or, one of these. You walk into a supermarket and you're sitting there with all your groceries in your cart. You go to the register, and then you realise when you pull up your app that you don't have enough money in your account. Or when you tap your phone or swipe your card, you realise, oh, I'm short. Now at that point, if a bank knows you and knows that your salary is going to come in the next day, because it always does, then, well, let's loan you the money. Let's call this an emergency cash facility. So I think as we start to think about, and that is something that, as a consumer, if I'm there at the cash register and I've got $600 worth of groceries in my trolley and I've only got $200 cash and you're offering me to fix that problem, what would I pay for that? $5, $7? Probably, because that the immediacy of the solution. So I think while subscription is good, I think that if you can demonstrate value in real time, there's a much easier ability to price that or put a value on it that turns into revenue for the bank.
Now, Moven's obviously partnering with banks, and Westpac being your first bank outside the US. We hear a lot, and have heard a lot for a few years now, about what the likes of Apple and Google and PayPal and Amazon, etc., the tech giants, may or may not do in the financial services space. What's your take on the threat, I guess, from them to traditional banks?
The biggest threat is what we call the last mile. Right. So right now, banks are used to customers coming to them when they need a solution, but they're getting weaker at owning the customer because right now banks are pretty much still waiting for customers to come to them if they need a bank product or service. So today, organizations like Apple with iTunes, Google, Facebook, these guys own, access to customers and understand customer behavior, their interests and other things more intimately. So it's not going to be long before banks are going to be having to go to the likes of Google and Facebook to get access to customers for customer acquisition. And I think that's where, if I was Google, Facebook or Apple, that's where I'd be focusing on. Having said that, Apple has been looking at at the payments landscape for many years now. Their first patents on this were in 2008, 2009, so they're definitely cooking something up. My view is that they might see themselves as a competitor for a basic bank account. The iTunes account could very easily act as a sort of debit card type device, but I don't think they want to compete in banking. I don't think any of them want to carry the risk of the complexities of banking.
And be regulated like a bank.
Right. So I think their view is they're quite happy to act as a go-between between the customer and the bank and have the bank pay for that access. And I think that's probably the way they'll go.
Now, your products are very much focused around the smartphone, but obviously Westpac are going to incorporate them into all their internet banking, so even desktops. But in terms of the future, we hear a lot about the internet of everything. Where do you see Moven in that sort of world?
That's a good question. I think as we move into the Internet of Things, wearables, ingestibles, all these other technologies we're looking at, we're moving into a world of data. A lot of sensors collecting data, a lot of devices giving us feedback, whether it's something that we're carrying around, like a smartphone or a tablet or a watch or smart glasses, or in the environment around us. So embedded computing in devices. So this flow of data is going to be two-way, sending information about our behavior, about our well-being, and then giving us feedback. So the way Moven thinks about this problem is what feedback is the right feedback at the right time, and then in the future, what is the right device to deliver that feedback on. So this is the problem of context. So I think with banks, it's not like, well, oh great, there's a new smartwatch, let's put your account balance on that smartwatch, or allow you to do payments with your smartwatch. Oh, now we've got smart glasses, let's put your balance on your smart glasses and allow you to do a payment with your Google glasses. I think that's sort of missing the point. Each of these different devices will have their advantages in certain contexts, and I think that's where we've got to think about it. The problem for a lot of banks with coping with this is that they will see something like a smartwatch or Google Glass as another channel to add on. But if you think like that, then it's going to get extremely complex to manage these increasing number of channels. But if you think about it as a stream of data or a stream of engagement for a customer and what information at the right time needs to be presented, then you start thinking differently about the architecture behind that. At the end of the day, Moven is really about two things. One is giving you awareness of the problem and doing that in a real-time manner from an engagement perspective. So it's the data set that we have and sort of managing that and giving that feedback to you and figuring out what is the right time to give you that feedback.
Now, you've written books on banking, and you're writing another one. You were saying just before we came on camera, you host a weekly radio show on it as well, and you obviously think a lot about what's going on in the banking and financial services space. I'll ask you now, just finally, to get your crystal ball out and tell us where you think things will be in 5-10 years.
I think probably the biggest thing that we're going to see over the next 5 to 10 years, which is exciting for me, is that if you look around the world today, the majority of the world, particularly the developing world, is unbanked. We have 45% of the world unbanked. And in the next 10 years, because of cheaper smartphones in places like Africa and Indonesia and China, Mexico, we will be able to bank these unbanked very, very rapidly. So we could have 1.5 billion people come into the banking system in the next 10 years because of a smartphone. Now, their first bank account, their first debit card, if you like, will be built into a smartphone. And in that way, they're going to think of banking very differently. It's going to be very much identified with the phone. So in 50 years' time, when we look back at all of these changes that are taking place, I'm pretty sure we're going to identify the smartphone was the game changer. And the potential for that is, in terms of that shift of banking. Banking's going to become more pervasive, more distributed, but less about the bank and more about the utility of banking when and where you need it. So this is it's a big shift. In fact, the reality is we're probably going to see more changes in the next 10 years than we've seen in the last 100 years in banking. That includes with what we've seen with the internet. The big change for banks will be that they've really got to have a compelling experience for customers in the future, or they don't get to play. The fact that you have a branch in the local town is no longer going to be the driver that gets people to work with your bank. Your banking platform needs to be when and where people need it. And in 10 years' time, this will be a bank account. And that doesn't matter whether you're a farmer in Africa farming corn or someone living here in Auckland, New Zealand.
Well, thanks for that, Brett. That's Brett King, who's the founder and CEO of Moven, and I'm Gareth Vaughan at interest.co.nz.